There is a video on the internet. It has been there since 2020. It is hosted on the official YouTube channel of the International Monetary Fund. It is not hidden. It is not leaked. It is not whispered. It was uploaded, deliberately, by one of the most powerful financial institutions on Earth, and it has, at the time of recording, fewer views than a mediocre cat video. In the clip, a softly spoken man in a gray suit sits in front of a beige curtain and explains, with the calm of a dentist describing a filling, that the future of money will be a system in which the central bank knows every single thing you spend, can decide what you are allowed to spend it on, and can switch your money off if it disagrees with your behavior. He says this without flinching. He says it as though he is reading the weather. And then he says the sentence that, once you have heard it, you cannot unhear. We will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability, and we will have the technology to enforce that. His name is Augustin Carstens. He is the general manager of the Bank for International Settlements, an institution most people have never heard of, headquartered in a tower in Basel, Switzerland, that answers to no government and pays no tax. The BIS is, in plain English, the central bank of central banks. When the people who run your country's money need someone to tell them what to do, they call this building. And the man in the gray suit, in the beige room, with the soft voice, is telling you, on camera, in public, that the money in your pocket is being replaced with a tool of control. This is not a theory. This is not a forecast. This is procurement. 87 countries are currently building it. 3 have already launched it. The Bank of England is consulting on it as we speak, under a project that, in a moment of genuine British self-parody, they have nicknamed Britcoin. The European Central Bank is in what it calls the preparation phase for the digital euro. The Federal Reserve is hedging publicly, while quietly running pilots through the New York branch with 7 of the world's largest banks. China launched the eCNY in 2020 and has now pushed it into more than 260 million wallets. India launched the digital rupee in 2022. Nigeria launched the Naira in 2021. And what happened in Nigeria is the part of the story that the people promoting this future would very much prefer you did not look at. So let us look at it. The Naira was supposed to be a triumph. The first central bank digital currency in Africa. A leap into the modern age. A way, the government said, to bring the unbanked into the financial system, to fight corruption, to modernize the economy. The reality was simpler. Almost nobody used it. After a year, fewer than 0.5% of Nigerians had an active wallet. The currency sat there, ignored, like a party nobody came to. So the government did something interesting. They decided to make people come to the party. In late 2022, the Central Bank of Nigeria announced that it was withdrawing the old paper currency. New notes would be issued in limited quantities. There would be strict daily limits on how much cash a person could withdraw from an ATM. The cap at one point was the equivalent of about $45 a day. For a small business owner, for a market trader, for an entire family, $45. The country broke, ATMs ran dry, queues stretched for miles, people slept outside banks, riots ignited in at least 4 states, branches were set on fire. Petrol stations stopped accepting cash because there wasn't any. Hospitals turned patients away. And the government, watching its population starve in a cashless gridlock of its own making, gently suggested that everyone download the Naira app. This is not a conspiracy. This is the public record. The IMF wrote a paper about it. The Financial Times covered it. The president of Nigeria himself eventually had to overrule the central bank to let people use cash again. And the lesson buried inside that catastrophe is the lesson the people building the next system have absolutely learned. You do not need to ban cash. You only need to make it inconvenient enough, slowly enough, that one morning a generation wakes up and realizes it is gone, and that the only thing left is a balance on a screen, controlled by a server, in a building, in a city, that they have never visited and cannot enter. If you think this is alarmist, I want you to consider what happened in Canada in February of 2022. A group of lorry drivers, whatever you think of their cause, parked their vehicles in Ottawa and refused to move. They broke no terrorism laws. They were charged with no terrorism offenses. The Canadian government, faced with a peaceful if obnoxious protest, invoked the Emergencies Act for the first time in the country's history and ordered the banks, not asked, ordered, to freeze the accounts of anyone associated with the protest. Not just the drivers, the donors. People who had given $20 on a crowdfunding website were locked out of their own money. No court order, no charge, no conviction. A name on a list and a switch, somewhere, was flipped. The Canadian banks complied within hours, because they had to, and every central banker in every capital city on earth watched what happened, and they did not see a scandal. They saw a proof of concept. Now imagine that same switch, but the bank doesn't even need to be involved because the money is the state. Imagine the switch is built into the currency itself, at the protocol level, where you cannot see it and cannot resist it. Imagine your salary arrives on the 1st of the month with an expiry date. Spend it by the 30th, or it vanishes, because the central bank has decided the economy needs stimulus and savings are no longer permitted. Imagine your money has rules. This portion is for food. This portion is for fuel, but only up to 100 miles from your registered address, because your carbon allowance for the quarter is nearly used up. This portion cannot be spent at certain shops or on certain books or sent to certain people because those people are, the system has determined, a risk. You think I am describing science fiction. I am describing published functionality. The Bank for International Settlements has a research division called the Innovation Hub, and the Innovation Hub has, on its website, technical papers describing every single one of the features I just listed. Programmability, expiry, geofencing, conditional spending, counterparty restrictions. They are not hypothetical. They are documented design specifications for the system being built right now. In Basel, in London, in Frankfurt, in Beijing, in Washington. And you have not been asked. There has been no referendum. There has been no general election fought on this question. There has been no mainstream news coverage of the consultation documents, no panel show debate, no front-page splash. The most consequential change in the nature of money since the abandonment of the gold standard is being prepared in plain view, while the country argues about something else. Anything else. Whatever the news decides to put in front of us this week. I want to say something again that I said in the last investigation because it bears repeating. The unsettling thing about this story is not that it is hidden. The unsettling thing is that it is open. The papers are published. The speeches are on YouTube. The pilots are announced in press releases. The Bank of England has a page on its website right now that you can visit, in which it discusses, calmly, how a digital pound might be programmed, and invites public comment. The consultation closed. Almost nobody commented. The work continued. This is how it always happens. Not with a coup, not with tanks in the street, not with a single dramatic announcement that wakes the population up. It happens in PDFs. It happens in white papers. It happens in working groups with names so dull that no journalist will ever write about them. On websites that no normal human being will ever visit. In language deliberately constructed to be unreadable, by people who have correctly calculated that the public's attention span is shorter than the policy cycle. By the time the cash machine in your village is removed, because the bank will say nobody was using it, the decision will have been made years earlier by a committee whose minutes you could have read but didn't because nobody told you to. I am not telling you what to think about any of this. I genuinely am not. There are intelligent, decent people who believe a digital currency could be a good thing. Faster payments, lower fraud, help for the poorest. These are real arguments and they deserve a real hearing. What I am telling you is that the choice is being made without you. The architecture is being poured while you sleep. And once the concrete sets, there is no version of this you get to vote on. Because the vote will be a balance on a screen, and the screen will belong to someone else. The man in the gray suit said it himself. We will have absolute control. We will have the technology to enforce that. He was not threatening you. He was briefing his colleagues. You were not the audience. You were the subject. The video is still up. The link is in the description. Watch it before they take it down, or more likely before the algorithm quietly decides you should never have seen it in the first place. The signal isn't lost. It's being rewritten in real time. And one day, very soon, the money in your hand will tell you what you are allowed to do with it. Sleep well.